What's up? I'm gonna do a bullish technical analysis video here and look at some formations. I like on these kind of support tangent lines. You get these kind of W sort of bear trap shapes, and this is something that I noticed a whole lot of when I was looking at the Nasdaq bubble trend lines and things like that. There's just a ton of these, and we've seen this along the 12-year bull market line that we had. There's several of these kind of bear trap shapes, and it's really been good when you draw the line through here. If you support the middle part of the W and you have the other parts go back down, the trend lines are really tight and they work really well on the bull market lines. And so I'm going to do some bull market lines and circle some bear traps, look at maybe a triangle thing here, and just try to see where we are right now. Kind of daily update technical analysis video today. This is Brian Lewis with MMT Investing, and things just changed. So I mean, I'm back here on the dead cat bounce near our Volmageddon deadline, bull the bull market line for the Volmageddon that we tested during the big down move, and I have some Bollinger Bands turned on. So I'm gonna do some trend lines and some Bollinger Bands, and let me let me jump out to dailies out on the current activity. So I'm out on the hourlies on the whole thing. So I was just looking at this area here and pointing out we had one clear W shape on that one, but we seem to be getting several on this one. We get kind of peak to peak bear trap kind of W shapes along our bull market line here. And this looks kind of like a W shape as well here. And so I was working on some support lines. This is the bull market support line I had before that chops this one really nicely. And it looks like it does this one well, but if you but it's above the W on this one. So that's not really where the line should be on this one. And so I have a second line that I just drew here that is chopping these bottoms off of this one, and that does support the top of this one, and that one supports this line better here if we turn that one down. And now we have a line that supports this and this one, and we have several of these kind of W shapes here that go kind of peak to peak on some of these dips in the bull market trend that we've had here. And I've seen some technical analysis people drawing kind of consolidation triangles around this area, and it doesn't look like a consolidation triangle to me. I'm just kind of drawing some lines through the reactions here and just trying to take a look at it. I've been trying to place this kind of red outer tangent, and that angle doesn't really work for it. Not quite. Yeah, I still think this is a good spot. All those tangent lines kind of are parallel here. If I do that, that's the same place I had it. And I do still kind of like this yellow line spot here, just because there's a couple of things. I mean, we get this huge gap up here right to that line, and in this trading action, we get that big reaction off here, big one here, and we get this big bounce here off the top of it. I mean, all this action and this bounce off the top paints that line pretty strongly. And this, from a bear trap perspective, could be a bear trap. Wow, it's getting hard to see things. There's so many lines. Let's go with some white, I guess. Or yeah, let's do white. So this W shape here looks like it could be part of another peak maybe here, and then if the cycle repeats like we saw last time, all of these W's kind of led to a high point that reversed back down, and so we finally reversed out of that last bull trap. Just trying to kind of figure out what's happening with the movement here, and I wanted to point out the Bollinger Bands and just kind of look at the basic movement. I did a big video on the Fed funds rate, and I had the Bollinger Bands turned on the Fed funds rate, which was really cool. It tracks the Fed funds rate really well, and you can see the general idea with the Bollinger Bands. Like if we look on this bull run here, you get activity along the upper edge of the Bollinger Bands during the up moves, and that's the general trend, is that you kind of hug the Bollinger Bands on the way up, and then you do kind of crossovers on the bull market kind of dips, and then occasionally you'll get a down move that actually hugs the other side, and that's a real bear move, like this one, and those are what lead down into these W shapes, and this one. So that's an indicator of a bear move, is when you're hugging the downside of the Bollinger Band rather than kind of sticking to the upside and crossing over and sticking to the upside. So that's just kind of a look short term for sort of day trading things. The Bollinger Bands are pretty cool. And reversal points quite often will poke out of the top of the Bollinger Band before you get a switch. And they can be useful for kind of trying to spot a switch. But right now, we are just, yeah, I mean, we kind of went up this side of the Bollinger Band here and it got volatile and volatile and volatile. So it's not really, it doesn't look like a bull market kind of run up the side of the Bollinger Band right now. But I want to kind of use these Bollinger Bands a little bit more. And let's take a look at the MACD right here while we're on the hourlies. And I'm going to switch out to the weekly and get the big one. Oh no. I want to do the MACD on the daily. Let's look at the Bollinger Bands on the daily and the MACD. Huh. Yeah, this is really cool. So you can see here when we came out down the top of the bubble, we are even diving below the bottom edge of the Bollinger Band and really, really attacking this downside of the Bollinger Band. And then this whole crossover, we're kind of bouncing across the middle and the top of it. And we haven't established any kind of a bull trend really in the Bollinger Band here. This is just a bunch of volatility. So that's an interesting look, and look how crazy the range got here on this move. I mean, the down move was so hard. This is like the widest Bollinger Band in history. This is insane. A huge rip to the downside. That's even below the downside of the Bollinger Band. And I want to take a look at this MACD because this is a really interesting thing that we're getting in the MACD on this level on the dailies. So this is kind of, you look for like a swing and then a swing back, just kind of reversals on the MACD. So I've been looking at that a lot, but I wanted to pay attention to where the lines are, the height of the lines, and what that kind of means as far as bear and bull market trends go. So I guess one big thing to point out here is that when you get the max divergence on the MACD, that's usually actually a low point. Like we get kind of a swing here on the dead cat bounce, and this bottom doesn't actually come in at max divergence. We get it back here, but usually what you see on the MACD is the actual low point is a divergence point on the MACD. And here we get our max divergence back here in the middle of this run. And the MACD has been coming down this whole time, and we have been getting higher highs and higher highs the whole time this has been coming down. And that's really a bullish trend. you would expect if this was the max divergence, you would expect this thing to turn over. And in this kind of market conditions, what you usually see, I don't know if I can get back to, yeah, here is you'll see it go green, and the top will actually be a point, and you'll come down to a point and up to a point and down to a point. And usually the tops and the bottoms on the MACD match the tops and the bottoms in kind of a credit contraction cycle wave, but we're not getting that behavior, and we're getting something else that's really weird, which is, so yeah, we're getting higher highs as this thing decreases, and it's a really long sloping decrease. It's not flipping. And also, okay, let's look at from Volmageddon here to the 2018 bottom. Let's take a look at the where the waves are relative to the line where they flip, because usually when you have a credit contraction cycle, you're going to start from a bullish spot up top, and you cross over, and then you get kind of a high and a low, high, low. You get kind of this bouncing behavior, and the peaks line up with the valleys. And the big thing that I want to point out is, while you're below the center line, all the waves back and forth are bearish. They are a whole downward trend while you're down here. And then while you're above this line, all the waves in the sideways movement is bullish. And then here we cross down, and you get some bearish waves, and then we're up, we get some bullish waves, and then we go down, and we get some bearish waves. So that's kind of the idea, is above the zero, you're kind of doing bullish moves, and we get a whole bullish super run up here to the peak, and then we get the biggest bearish move in the history of the world here, which is absolutely nutty. But we've come back up into the bull side of the chart here. So basically, if we go sideways or wave around up here on the bull side of the chart, that should be bullish movement to the upside. And if we get back down underneath it, then these moves would be bearish moves. But the only thing that could happen bearish now is for it to actually turn down hard. And that's usually what you get in a credit contraction cycle, is you get off the peak, you get a turn down, but it almost never will go back up here into a bullish area during a contraction cycle. And this is a really weird one. And not only did it make it back up into the bull side, it's above even where it started, which is kind of nutty. And this whole thing right here is all really wild. This volatility kicks up starting with Volmageddon here. This is all historically pretty intense volatility, well, since Volmageddon, not surprisingly, I suppose, but oh, okay, we got it back. So we're back over here in Volmageddon, and you can see from Volmageddon to the bottom, there's just sort of a general downtrend from peak to bottom here. And then from here, there's just a general kind of uptrend from the peak to the top. And that kind of continues to here. So this is really interesting. This is absolutely insane. But this kind of trend of kind of headed down and heading back up here, and this does seem to be turning over here. So I think that we are at a point where we might go red on this thing, but the depth for which we might go down might not really be that far. Because if you look at, like, here's kind of a spot where it went max divergence, and then you got kind of waving activity up here on the bull side, right? And the divergence is going down, but it's going down during a bull market, and this flip does flip down. I mean, it does pull down, but it's up here in bull territory. So this is just a V bottom in a bull run here. So you get kind of this drag out flip over shape when you're up in the bull area. And we are getting kind of like, we're getting those wild kind of bounces across the top of it. And it hasn't flipped over yet. It still looks like it's heading up. So just taking a look at the MACD, I guess the main point is just being up here on the lines is this is bull territory up here. Like this was bear territory. And for the bouncing downward movements, we needed this thing to really turn over. Well, maybe not that far down, but below the line, to get a downward bouncing movement like this, it needed to stay below that line and bounce down here. And once you get up here, it's bull territory, but generally it doesn't just like run sideways. It usually bounces up and down pretty vertically, like up down up down up down up down. Like those kind of runs where it just runs sideways for a long time are more rare. It's much more common for it to just come down. And so we're kind of in uncharted territory here, like off the top of the bubble. It might be good to go back and kind of look at these heights. I could go back to like the housing crisis on this chart, I guess. Let me switch out to the weeklies and see what they look like. So this is a really cool look at here on the weeklies. So we get the financial crisis here, and we get all this bull side activity. The whole way up to the top of the financial crisis is all bull side activity. And this here is all bear side all the way down to the bottom, and then a pretty steep climb out of there. But this kind of a W bottom shape that started the new bull market is right here where this is on the weekly candlesticks, and this where we went into positive territory here is right where we came out of that kind of W bottom here. And that's where I've been placing these, instead of on the consolidation zones, I've been finding that kind of W bottom reversal and placing the bull market line right at the end of that W bottom. And that's right where this thing flips over into positive territory. And then we do get a couple of dips. Like these are the little euro dollar, the little W's, these are monetary contractions in the middle of a bull market. And these are all the euro dollar contractions. Jeff Snyder talks about these a lot on these contractions. And these are kind of that W bear trap shape that you get in the middle of a bull market. But we want to look at the shapes kind of here on the way down in a bubble. And I mean, this from this kind of point here where we switched into negative territory was just after the top of the housing bubble. And it took, like 2 years to get down to this point down here. And this is like a 3-month cycle that did a pretty big volatility swing here from positive into negative territory. And that's the V bottom reversal that we got on the 2018 bottom. So minus these a couple of little dips down to the negative side, I mean, we have a 12-year bull market run where all of the waves are kind of on the positive side here. And that's what you'll see on a bull market line. And really this yellow wave tangent is really just on the actual chart from the beginning of this until right here when we terminated on the dead cat. Like right here where we crossed is where we terminated. Let's see. No, we haven't terminated this one yet. That's where we killed this one. W bottom. Ignore that. I'm trying to look at the end-to-end tangents here, and they don't flip quite on the on the weekly candles. But still you can see generally when we're down here, when the lines are below, those are generally credit contraction cycles. And like the backside of a bubble is not just one credit contraction cycle. That is a long-term credit contraction cycle that's doing a real down move. And these are single cycles, these ones. All of these are single cycle reversals. And actually this move here was a credit contraction cycle also, but it didn't get down into the bear territory. But it was still a big move down here, and that's the Volmageddon cycle up here. So I just want to take a look at that, and what we just did here is absolutely nutty because this is just in 1 month. This is not even a whole cycle. This is 1 month out of like a 3-month cycle that we got all the way down here. And usually it's kind of top to bottom, on a 3-month cycle on the weekly, it's a top to bottom kind of thing. You just get the swing down on the credit contraction cycle. And these are two shorter ones here. But it's the same kind of thing with these. You just get the swing down, and that's one cycle. And here, I mean, we've already hit a bottom here. So that looks like a big swing down, but we're super in bear territory on the long term outlook right now. And that's a big contrast to when you zoom into the daily candles. We're on the bull side on dailies, and when you go down here to the long term, where you can really see like the whole shape of the bubble, we're super bearish still. And I don't know where this thing's gonna go, but I just wanted to kind of show how to read these MACD charts and see kind of when you're in bull or bear territory, and then once you know where you are, then the crossovers make more sense. So like this crossover from here to here is all in bear territory. And all these crossovers that happen here, this is all in bull territory up here. And so this is a bunch of zigzags on an upward bull trend, and these are those reversals down underneath here. And you can get it to flip back and forth. But you see here, like this whole thing is in bear territory, and we flipped out and back while we were underneath, and you get that downward angle on those. So that's kind of how you can tell the angle. Like the higher up you are on this thing, the steeper the bull angle, and the lower down you are, the steeper the bear angle is going to be. And then you get a reversal and actually cross over on this thing. And that is actually just going to be kind of boring and start a new kind of bull market line when you can get all the way back up. And so that's kind of the bigger MACD. And let me go back and look at the housing bubble on like the dailies and see what it looks like. Okay, so here we can look at sort of the inter-cycle movements when you get the up and down bounces within one cycle, and try to track where you're going in the cycle. And here, this is one cycle down. And so in the housing bubble, we did a whole lot of crashes down here, all in bear territory. And then we got this big bull trap here, and that did go up into the bull territory on the bull trap here, and then barely again into the bull territory on this bull trap. So I think that is a bull trap thing to do, is to get into positive territory. But then it needs to rip to the downside in order to complete a bull trap. Oh yeah, dead cat is still in positive. Yeah, so I mean, kind of kind of from the peak. That's kind of how the down movement works, or to here, like from the top peak here to the bottom peak here, and then that reversal where you switch back over is bullish movement, and then you're in bull territory, and then when you switch back over, you're going into bear again. And you can see that this one doesn't bounce very high, and that's because it barely went into the bull side. And then we can go back and look at ours again and try to check it out. I don't think the Bollinger Bands are doing anything too interesting here. Yeah, I mean, just, on the way down on a bubble, most of the activity is going to be along this bottom edge. But here on the bull trap, we get top edge movement, and this one we get a little bit, but most of the activity is going to be along this backside until you get all the way down, and then you start getting the activity on the top side of the Bollinger Bands again. So let's go back to our thing and check it out. And then you can see on some things like this, like these peaks that like shoot through the Bollinger Band is a good point for a reversal. Like anytime you shoot way out of the Bollinger Band, it's a good time to look at it as being like this one right here, break out of the Bollinger Band, and that's where you do that V-shaped bottom on this one. But this V-shaped bottom is not a normal thing. Like this is a special thing that happens when you're on a bull market trend line and you switch to a higher angled bull market trend line. Like this is a new bull market trend line that happened here. And so this V-shaped recovery is not just a random bounce. Like that is a crash on the previous trend line, and it is a reversal out into a higher trend line. And that does happen. I mean, that happened in financial crisis, that happened in the Great Depression, it happened here in the Volmageddon bottom. It does happen, but that's not just like a V bottom isn't just like a random thing that happens all the time. Like everyone just says like, oh, V bottom, let's just do a V bottom. Like that's a really special event when you are creating a new higher level trend line, and it's not some common thing that happens all the time. Yeah, so yeah, this is on the dailies when you have all this tight little movement here, and this is the Bollinger Band on the dailies for our chart. It's absolutely insane. I mean, it's just ripping down, and now it's bouncing on the top side of this middle line here, and it's consolidating still. So, man, that's not useful for a prediction right now. It's just crazy. That's all. That's just nutty. And then out on the weekly candles here, it's even crazier. Like look at this range that it's created here. But you can see that we stuck to the downside of it here, and now we have just barely stayed underneath the middle line and kind of started to reverse here, and we're very bearish long term, and we're staying underneath the Bollinger Band here long term. So the long term outlook is very bearish, and the intermediate outlook is bullish, like on the dailies. So this is just, I mean, it's just kind of crazy. Then you get these big swings when you're doing reversal periods, which I mean, obviously this is a big reversal period, so that's not that crazy, but just the magnitude of this thing is pretty crazy. And see if there's anything useful here. So, I mean, in the housing bubble, we crossed over this thing. Yeah, it's not really, I mean, we crossed over the center line a bunch. We did some higher bounces. So as far as the Bollinger Bands are concerned, we did not do a really high bounce on the S&P because we didn't even get to the center line. We stayed underneath it. And it's very bearish, long-term bearish. But that makes it it makes it tricky to predict when you're getting different signals on different levels here. Like when is this going to be bearish or what kind of timeline? Because this is bearish on like the 2-year kind of timeline or something like that. And then here back on the daily candles, you can see on the daily candles, we're completely staying on the bull half of the Bollinger Band. We're not like sticking to the top or making like a bullish move up so much, but we're definitely on the bullish side, and we're definitely on the bullish side of this range up here. And it's leveling off maybe, but it hasn't, the red line hasn't flipped over. And then, so this red line has to flip over and get back to the bear side. And this blue line should cross it and bounce somewhere. In order for the bear case to sort of play out during this cycle, which is like another month and a half, like this daily really needs to turn over and get back to the bear side. That's what the bears want to see, and the bulls want to see waving activity up here and stay on the bull half. So I guess that was I didn't really have a plan coming into this video. I just wanted to kind of look at a lot of things and show the technicals. I think that's about it. Please hit the like button to help me out with the YouTube algorithm, and this is not investment advice. And just very interesting. It's just very interesting and not easy to predict what's going on here. I wonder if I can. I'll take another look at some other bubbles and try to check out these Bollinger Bands and things and see if there's any patterns that are useful. Maybe Nikkei or Great Depression or something like that. Happy trading.